We're going to take a look at 5 stocks that are resisting the downtrend sell-off in the stock market. Plus, we're going to take a look at the Nasdaq and the S&P 500 negative divergence that is forming. Stay tuned. We start right now. Thank you for watching. This is Richard with Wisdom Investor. And we're going to take a look at 5 stocks here that are resisting the downtrend. So stick with us for the whole video. We have some good information. If you have any comments, leave a comment. We're also going to take a look at the negative divergence that's forming in the S&P 500 and the Nasdaq. This may lead to more selling. We're going to start with the Dow Jones Industrials Index here first. Just get a big picture of what's going on in the markets. This is a weekly chart on the Dow Jones Industrials. We had lots of selling this week. We had some pretty good volume here over the last couple of weeks, with 2 of the 3 weeks with selling volume to the downside. So Dow Jones Industrials was down 3.3%. Right now, support's at 24,500. A break below 24,500 on the Dow Jones Industrials would be very, very negative. We're going to look at our 5 stocks here in just a moment. So that's a quick look at the Dow Jones Industrials. We got selling coming back into the markets. So what's causing that selling? Let's take a quick look. The coronavirus cases grow in more than 30 states. So we're getting an alarm here with the coronavirus. If that continues to grow, states have to start shutting down. That's going to affect business, and stock prices may move lower. Let's look at the S&P 500. Again, on the weekly chart, had the nice charge up. Now, we did not break the highs like we did in the Nasdaq. If we get a break below 2,900 on the S&P 500, that's going to be real negative. Now, there's some pretty good support above that, but a break below 2,900. If you look at some of our technical indicators on the S&P 500, here's the stochastic indicator starting to turn down. Here's a look at the number of stocks above the 200-day moving average, down to 34.7. Like to consider bullish above 60, a negative sign. Stocks above the 50-day moving average is now dropping below 50. That's also turning negative in the S&P 500. What are some of the other factors that are causing this market to drop lower? Let's take a look at one of them. Millions of people are still losing their jobs each week. Now, we knew there was going to be a lot of jobs lost in the first couple of weeks when the coronavirus caused many people to get laid off. The numbers of laid off did drop, but now we're starting to see a steady flow of jobless continuing claim. So right now, about 20 million people are not receiving a paycheck. They're on the unemployment rolls. If that continues to grow, even if it's a steady pace sideways, that's going to be negative for the markets. Let's jump over here to the Nasdaq 100 QQQ. Broke out to new highs. However, let's take a look at this negative divergence. The last time we reached these new highs back in February, you can see where the RSI index was. Come all the way back up, broke the previous highs, but we have a lower RSI indicator here, RSI index. So we have a negative diversion. We have higher highs, but we have a lower high in the RSI index. That's negative for the markets. So the Nasdaq was down 1.47%. You can't just eat software day and night. In other words, software stocks, Nasdaq technology stocks can't just keep going up day in and day after. Eventually, we're going to get some type of selling in the technology shares. Okay, we're going to take a look at 5 stocks that are bucking the trend down. These stocks are moving up. The rest of the market's moving down, so let's take a look at these 5 stocks. First stock we're going to look at here is Big Lots. Symbols BIG, up 27%. Let's take a look at why this jumped here. We're looking on Motley Fool here. Why Big Lots stock was going much higher today. Big Lots stock was trading much higher on Friday morning after the company provided its shareholders with an unscheduled business update for the current second quarter of 2020. Turns out its business is very popular. They go on to say here, before Friday, Big Lots only said that Q2 comparable sales were up strongly. They used the term strongly. Today, the company announced its Q2 comp should be up by a percentage in the mid to high 20s. That far outpaces the other impressive 10.3% comps increase it reported for the first quarter. Okay, we're going to take a look at the second stock here that's going up while the rest of the market's moving lower. So this stock here is called Fastly, F-S-L-Y. Look at this trend. The rest of the market is moving down here currently. Now this has had a pretty good move actually for quite some time. Looks like since May. Even right now with the rest of the market suffering, this is moving higher. Let's see what Motley Fool says about this. Why shares of Fastly are rising. It says here, stock moved higher today as investors search for companies that have the potential to grow during an economic downturn. The company's stock was up by as much as 8.7% in the afternoon. Fastly shares rose once again today as investors viewed the growing company as a good long-term bet during the pandemic. Fastly is an edge cloud computing and content delivery network company that helps other companies speed up their website. Okay, we're going to take a look at our number 3 stock, why this stock is going up versus the rest of the markets. So this stock here that we're talking about is Bill.com Holdings, B-I-L-L.com. B-I-L-L is the symbol. And you can see again, this is moving up in June while the rest of the market's having some problems. So why does Bill.com gaining? It says here, shares of Bill.com climbing today after digital payments technology company said it has extended its contract with Intuit. Goes on to say here, Bill.com, which provides cloud-based payments technologies for small and medium-sized businesses to use for back-office operations, said the extended agreement with Intuit will enable the company to continue supporting the simple bill pay service by QuickBooks. Number 4 stock we're going to talk about is called Ingo Health. We're going to take a look at the chart on this stock here. You can see again, this is moving to the upside while the rest of the market is suffering. Big volume to the upside. What does Motley Fool say about Ingo? Could Ingo Health be a millionaire maker stock? Ingo Health is one of the post-market crash winners. Shares of the digital health company have soared more than 200% from the March low, and the stock is up more than 100% since last July. Digital health has gained popularity with the idea that managing patients' conditions at home leads to lower hospitalization rates and lower healthcare costs. Let's look at our 5th stock here. This is called Ring Central, RNG. You can see it's on a nice uptrend here, bucking the trend, going up as the rest of the market's going down. Let's see what Ring Central is all about. Ring Central is a provider of software as a service, or SaaS solutions for business communications. Its solutions can be used in multiple devices, including smartphones, tablets, PCs, and desk phones, which allow communication across multiple lines. Okay, there's 5 great stocks you can keep your eye on. We also reviewed the overall markets. If you have any questions, leave a comment. Thanks for watching.